Shares of Abercrombie and Fitch soaring today. The retailer beat estimates and raised its annual profit forecast. Our next guest sees over 30% upside to the stock. Let's go to Janine Stichter, Managing Director, BTIG. Thanks for joining us today.
Thanks for having me. Good afternoon.
So revenue was up 7% year over year. The company owns Hollister. That's a brand that's doing pretty well. So what age group does it target, and what have they been getting right?
So Hollister targets a teen consumer. It's typically ages 15 to 20, so squarely right in that Gen Z customer that we hear so much about. Whereas Abercrombie, a lot of people think of it as a teen brand. They've moved older and more upmarket over the last few years, and they're targeting a millennial consumer, so probably in the 25 to age 40 cohort. And what they've been getting right at Hollister is really the fashion and the branding. This is a brand that for a long time did lose market share, and they've really found their way, leveraging a lot of what we've seen at the Abercrombie brand, that same playbook of getting the product right, getting the marketing right. They're now doing that at the Hollister brand.
All right. Is it mostly sales in the U.S. that are gaining momentum, or is it elsewhere?
It's primarily a U.S. story right now. EMEA, in Europe, they've also been seeing some traction, particularly with Hollister, mostly in the UK and in Germany. APAC has been a bit more challenging, but we think that there's a lot of opportunity there. But right now, this is primarily a U.S. story where they just have a lot of momentum with the U.S. young consumer.
Okay. U.S. consumer confidence is low. That number came out today. Should this retailer and others be looking to a strong holiday season given that scenario?
Yeah, it's interesting. There's definitely a disconnect between some of the headline numbers around consumer sentiment and what we're seeing companies say about the start to holiday. From everything we've heard, the consumer is still spending where they want to spend. And I think a lot of it comes down to having the right product, having the right messaging, and then also kind of being tuned into the fact that the consumer does want value. So I'll give you one example. Over the past week, Abercrombie has started their Black Friday messaging. They're messaging 25 to 50% off the whole store. In reality, most of the store is more 25% off, not 50% off. But they know that that 50% number is going to get a lot of eyeballs, get people to pay attention, and get people to at least come in the door and consider spending with them. So I think it's about messaging and having the right product at this point.
Okay. They also have an NFL collaboration. Has that kicked off yet?
Yeah, the NFL collaboration has been, they kicked it off last year in a smaller way, and then this year expanded it for the Abercrombie brand. It's been really successful. I think one thing that's been really interesting to see is that the Abercrombie brand turnaround hasn't been just women. It's been with men as well. And I think that NFL collaboration is a really big part of that.
The company's been buying back shares. Janine, where do they stand for that? Are they on track?
Yeah, they're actually ahead of plan. They had guided to $400 million in buybacks for the year. Now they're planning $450 million. So it sounds like they bought a bit back more than planned, either towards the end of Q3 or at the start of Q4. And I think what they saw there was a stock that is trading at a very inexpensive multiple. They feel like the business is back on track, and they saw that opportunity to deploy cash to accelerate their buyback plans.
Let me ask you about tariffs. We know sometimes a lot of these garment or apparel companies source from Asia. Tariffs have been sort of up and down for the past, since April. How have they managed to work with the tariff situation? Yeah, the tariffs are a headwind for this company. If you look at Q3, they were a little bit over 200 basis points of headwind from tariffs. Q4, they'll be going up to about 350 or so basis points. But I think that's going to be the worst of it. What we're hearing from them is that starting in the first quarter of next year into the back half, they'll be able to offset the vast majority of price increases. They're going to be very strategic about it, but they will be taking price through vendor concessions, through reworking their sourcing into different regions where maybe the tariffs aren't as onerous as they are in, say, China or Vietnam. So they're able to offset most of it, but right now it is a pressure on margins. All right. So how are the rivals in that same space? Who would their rivals be? Would it be someone like Gap?
Yeah, I think on some level, Gap does compete with Abercrombie just because you're looking at a kind of millennial consumer that with a strong foundation in denim. So that's part of it. But I would say the bigger competitors would be companies like Aritzia, another Canadian company there who very much plays in the space Abercrombie plays, and they're doing very well right now. Another one on kind of the teen space would be American Eagle. We'll hear from them next week, but they've seen a nice turnaround in Q2 into Q3, and we think their holiday's off to a pretty decent start as well. So overall, I think that young consumer does seem to be coming out to spend despite headlines that would suggest that they're pulling back.
Let me ask you about price target for Abercrombie and tell me why you think it's going to go where it's going to go.
Yeah, so the backdrop of how we think about Abercrombie is that people have been assuming that because they have outperformed so much since COVID, that the numbers, the estimates are going to normalize. And I think some of the weakness of the Abercrombie brand to start the year kind of fueled those concerns. We think they can earn at least $10 in earnings next year, assuming that they get back to a multiple that's even close to their historical levels, even close to peers. We're using a 12 times PE multiple. That gets you to our price target, which is $118. So you just have to assume that they can hold their earnings estimates where they are right now, and that the multiple can, once we get that confidence back from investors, that the multiple can re-expand back towards historical averages, not even surpassing it, but just kind of trading in line with historicals.
All right, Janine Stichter, thank you for joining us. Appreciate your time. Janine is with BTIG.